So we're going to look at what is an order block, how to use the high time frame areas to find the best ones, and an example of a trade setup. Looking at this, we have Bitcoin in an uptrend, and there's recently a really good example of an order block. We're going to look at a bullish order block. The high time frame is bullish. This is the 12-hour chart. We want to make our decisions and trade entries near high time frame areas of interest. And if we look here, it's a level of support. It falls right around this 12-hour order block right here. We have price reacting off it. As time goes on, comes down, and this 12-hour candle actually sweeps below all these lows, takes out all the liquidity that's sitting here. And what happens? It reacts and it goes up and it resumes its bullish continuation. So how do we get in trades? How do we narrow this down? What we do is simply go down to a lower time frame. See, we're down to the 4-hour. We were on the 12-hour, and we can see that within the 4-hour there's this 4-hour order block now. All right, so we can mark that out if we like. So price is swept, creates a 4-hour order block, and it pushes up, retraces into it, and goes. And it creates another order block, the break of market structure, which is what we want to see. We want to see price will be going up on the high time frame. Say this is the 12-hour for our example, and then down in these areas there's orders that cause the price to reverse and get back in line with the high time frame market structure, right? And it happens again here. So you want to drill down in these areas and find order blocks and market structure that's suggesting that this high time frame dip is shifting and moving back in line with the high time frame momentum. So we'll come back over here to the 4-hour chart, and we're sweeping all these levels on the 4-hour. So we'll go down to the 1-hour, and here's that 4-hour order block in the 1-hour time frame. So we can see that price has come down, and what we want in a strong order block is a strong reaction where it comes up and changes market structure, right? So I'm looking at this. There's one market structure break right there. And this continues and goes up, and we see another market structure break right here. This is giving information that's suggesting this high time frame, this 12-hour, as we drill down to the 1-hour, is starting to change. The 1-hour, it's broken market structure with a strong move, and that strong move as well has created what's called a fair value gap. And that's just an area where there's no wicks in between. It was such an impulsive move that the price shot through the area, the level, didn't even go back down all the way, and it continued up. So that's what you want to see. And so this order block is a good order block because of this market structure break and the rate at which it took off, plus it's in a key high time frame, 12-hour area. So on the 1-hour, we can tell this looks good. So when price is up here, we wait. We don't just jump in because we want the best risk to reward we can possibly get. So we wait for price to come back down into the order block, right? And it does that here. And at that point, we could take a trade, right? While price is up here, you could anticipate that price is going to come down in this order block and react and get back in line with the high time frame momentum. And you're going to want to target all the way up there. That's a 4-hour trade, right? If you want to be play it a little safe, you can put your stop just below the wick, because this is the area, if price comes back down here, this idea is wrong. And you've lost 1 hour, right? But if you're successfully taking 2-hour trades, your wins are 2 hour each time, you can lose up to 66% of your trades and still break even. So that's another video, but for today's purpose, that's a good trade, right? So price comes down here, reacts, takes off, and then we could even drill down, just for purpose of this exercise, drill down to the 15-minute chart, right? So this is also how we use time frames to drill down. So in the 15-minute chart, right, this order block, you're going to get even tighter entry. Within the 1 hour order block, within the 1 hour bar, there's 4 15-minute candles, right? So this order block here, if you want to play it really tight, that's the 15-minute down candle that caused price to move up and break market structure. Here, here, here. And so then we just wait. And price comes down. And once it taps this order block, I mean, if you're opening a trade on the 15-minute and waiting for that, you place your stop just below the order block. You have a limit order set at the top of the order block. In this case, it tapped that 15-minute order block. And I mean, that's an easy 2-hour trade. I mean, this thing, that's a 9.5-hour trade right there, just to that level. This is a very clean order block example. It's not always this clean, but when you're looking at high time frame levels like this, often price will react like this, and that's where you want to get in. And what you can also do on these moves, kind of extra sauce, extra little bit of information for you, you can take a Fibonacci. I'll be doing another video on fibs, but just to kind of give you a quick example, if you pull a fib from the bottom of the wick to the top of the wick, this low, this swing low to this swing high, take that out for you so it's a little less confusing. Take out that one. Good order blocks are also within this range, this sweet spot in the Fibonacci. And I'll do another video just on this Fibonacci tool, but it's really good, adds confluence in making decisions about trade entries. So we can see that price is going to come down here, and what this is below the 50% of this swing high to swing low. So that's a discount. It's a discounted area where big players want to buy in, place their orders, because they're getting a discount. It's like, in this case, think of it as like 70% off from this swing high. So that's where they'll jump in. It's also confluent with this order block. It's also confluent within this 12-hour time frame and range. After this uptrend, it's going down. So it's just so much confluence in this. It's a great example of an order block. I hope that helps. Yeah, I really hope that helps. So yeah, I just wanted to give a quick explanation about that. If you enjoyed it, if you liked it, hit the like button, leave a comment down below. Tell me more what you want to see. I could do an even more in-depth order block videos or cover it again down the road, but I want to cover breakers as well, and kind of do another video, because this is a great type of trade entry, the ones I look for. It's very profitable. And there's also a way to use something called a breaker. So once, for example, I'll just give a quick synopsis on what that is. Say if price comes into a level, it moves around. Right, so there'll be an order block down here. That's a bullish order block. So it'll be a down candle that causes this to go up and break market structure. When there'll also be a order block here, a bullish order block that pushes price down, that breaks market structure here. Now when this order block gets broken by market structure, it becomes a breaker. And when price comes back down, isn't the best picture, but when price comes back down, it'll often react off this area and then take off. And I'll explain that more in detail in the charts in my next video. But for now, I hope you have a better understanding of what an order block is and how to use them. It works the exact same in reverse when the market's bearish. You can use bearish order blocks, just basically take the chart and flip it upside down, and that's what you'll have. So we did our example was a bullish order block. There'll be bearish order blocks that price will react off and then go the other way at key high time frame levels. That's one of the most important things. A lot of times I see people just picking random order blocks, throughout here, and they're not as meaningful. You're going to get more bang for your buck on looking at high time frame areas of interest and looking for reversals or market structure shifts in those areas. Hey guys, thanks for watching. Please hit the subscribe button, give us a like, and notifications as well for your next videos.